But the bigger deal is this TNX above 3.67, but we need it on a weekly. Just the fact that it's on a day doesn't thrill me, right? So we could poke all the way up to 3.7 and then come right back down. The point is, so far, look what we've done. See this monthly here back in June? Okay, we broke above, we came back, got supported on the 10-year. That was a weak, pathetic excuse for a bounce, but the bond pullback was very dramatic. We came right back down, 3.45 area, and we've just been stabilizing. So this is why I mean we really need to get this going. If this is going to be a threat to the market advance, we have to get going. It's just, there's no and if or buts about it. We have to get going. Major weekly breakout, if above, and stays above. So what would that do? This is anyone who does this on any time frame, doesn't matter. You can see this leg with a pullback to support, which that is, will equal another leg of this strength. So literally a low of 2525. So 180 basis points. Markets would lose their stuff if then. This is an if then. This is not a high conviction for me right now. But if then, if this lovely pullback to support, this is TNX 10-year on a weekly. If this is the short-term bottom for the cycle in 2023, because the Fed is looking at huge unemployment gains, etc., and now mortgage applications are up and used car prices are going higher and all the things that Craig's talking about for the next inflation impulse, what's going to happen? We're going to get above and we're going to follow through. And this leg will equal this leg. So where would we be? Don't laugh at me. 3.33 was my price target. We hit 3.334. We'd be at 5.13. Where's that? Right the heck up here. If then. Make sense? Hopefully it makes sense. So in order for that to confirm, we would have to get above 4. So here's where I'm at. And I know I wrote about this before because I remember writing about the 10-year on the monthly and the quarterly and all that jazz, saying we're going to pull back to 3.45, 3.58 area. Look. So here's my 10-year on the monthly. What do we hit? We hit the 4%. We actually went above it, 4.33. But the point is, that was a 400 EMA. It was a quarterly, and then we came back down. Where did we come back down? To another quarterly and a fib level. And look at the 10. What's the 10? You're in trend. Beautiful trend is still ongoing with yields. What was the 10? 3.36. Here's the 200. Here's the quarterly. So you know how I came with that idea, right? High conviction that we were going to bounce at 3.33. Now, that is just a pullback to support. Big picture, if all of you are thinking about macro as it relates to inflation, deflation, equity repricing, risk, what's the biggest risk? What's the biggest risk to equities right now? Unemployment? Some would say that's it, right? Strong market. No, that's not it. Earnings being ratcheted down so they can step over, but basically economic weakness through earning contraction. Yeah, that's part of it. That's how it manifests. It's right here. It's yields. So if yields are going to be supported here on the monthly above this 3.33 and move higher, we're going to know because they're going to get through 4, and they're going to move up to 4.7. And I actually have 5.13 as a measured move. Close enough. All right. So if we get, this was the tag, 4.7 to 5.3. And I just said 5.13, didn't I? All right. So that's not perfect. That is definitely where we're headed. That is high conviction. At this point, big picture. The question is when. We come all the way down to 3.176. I would still be bullish. 5.13. Look at that. I knew there's a 5.13 around here somewhere. So if we do this 100% move of this pullback, we will be hitting that I called it 5.13. Close enough. Yeah, perfect. Close enough. That's it. That's perfect. That's perfect. That is price target. Literally. It has to be this year. I'm fascinated. It's not going to be right now, but it's definitely setting up for a big deal. But right now we're just channel surfing. Okay. So this is on a daily, this is on a monthly. My monthly is clearly higher. There's no question. We get going here above 3.678. So let me just round this. Let me just summarize this. If we close above 3.678 on the weekly, and we could still come back down and then move higher, not in a straight line. That's not what I'm saying. And then we have basically the whole month to work sideways to higher, right? But this is the 10. We have literally a very strong shot of having a solid move up to 5.13, 5.3 this year. This, I just happen to want to take a picture day, week, and month to kind of show that this support and then the fib levels, I don't need the fib levels, honestly, because that 5.13 is actually measured move, but I knew that even before doing the fib, it just confirms for me. And 5.3 I already had up there from way back, right? This is literally June 2007. So this is all working. We broke out, we came back to support. We broke out, we came back to support. This is moving beyond well. Yields are looking to me to be a little bit bullish, just a little bit bullish. I think we need confirmation. That is a, gorgeous morning star reversal on a quarterly and 200. And I knew this was easy. It's not so easy, not at all easy for me now to say definitively with high conviction, we're going to get above 3.678 on a weekly and above this trend line and move up another 180 basis points. But that's what it represents. I have a very strong feeling that if we were to get back above, right? See this big rejection candle on, guess what day it is? October 21st, Bank of Japan intervention. What was the high? 4.333. I think the market would have a major conniption fit. We're down 100 basis points, right? From this high to this low, literally 100. It's impressive. 4.33 to 3.33, 100 basis points lower. So this is where markets started getting very, very, very bulled up. Yeah, that's your line in the sand of where we absolutely reverse and markets get very, very, very bearish. Anyway, they will do whatever they have to do, just like they came in a coordinated October 21st central bank intervention. From what I could see, 4 countries. And 5 actions of coordinated manipulation. Treasury Secretary came out and said, yeah, we got to provide liquidity. That was actually a few days prior on the 12th, which is why the 13th was the bottom. The 21st was Bank of Japan intervention, Fed Whisperer article going out saying we're going to do we're seriously considering a step down pause. And then basically the whole US dollar swaps with Swiss National Bank, and then China ordering their state banks to stem the selling of stocks. That's literally, that was the headline. And that's what happened. So yeah, I think that's going to be a big deal. We get back up here. Equities will have to be repriced. This is 4% would be the shock and awe. I'm not saying it's going to happen in a straight line, but when and if we get above this 4% in the 10-year, I'm feeling pretty confident that this trend line right here is going to be a big moment of concern. And then once we actually take out 4%, we're going to start moving up into those higher levels, which happens to be the high of 4.3. Actually, it was high of 4.33. And then 5.13, which is the measured move and then literally 5.3. So that's what I'm seeing happening this year. I just don't think it happens in a straight line. And I'm going to put it right here just to kind of, we're right there. Such a big, important level right here. This, I think, is very important. It bears watching, but we've done this before and then failed miserably, right? So I thought we were going to go down to 4.3 here, 4.3, 3.3 here, 3.3. We didn't. We've gotten defended, but this is it. We're now in this bounce mode. It means a lot. Very, very important. That's actually 4 levels of support. As I spend more time on the chart, I see more evidence of support, right? All right, but this is absolutely point of inflection